But what's really drawing the attention and has slipped to a one-year low and lost about almost 1% in just the last 5 trading sessions has been the currency. Let's get in further perspective. Mithul Kutecha, head of global FX strategy at Credit Agricole at CIBC, joins us on the show. Mithul, hi, morning. Do you see the dollar index surging further? And if so, what levels are you monitoring there?
Well, I think there's already a pause in the dollar index for now. I think it's been pulling back in recent days, partly because of the move or uncertainty about Fed tapering policy, but also the fact that the dollar index has come a long way in recent months, and I think we're seeing some profit taking in some of the strength against versus a dollar against major currencies. So, I think we're in a bit of a pause period. I do think, though, that this is a pause, a temporary pause, and I think the dollar will resume its uptrend in coming months. Our forecasts for dollar index show at least another 4 to 5% increase in the by the end of this year, with gains versus the yen, the euro, and the Swiss franc in particular over the coming months to push a dollar index higher.
So, Mithul, how do you see the strength in the dollar index impacting emerging market currencies like Indian rupee?
Well, I think the emerging market currencies are going to be under pressure in the near term, including the Indian rupee. Part of this is the rise in global risk aversion, the uncertainty about Fed tapering and potential for capital outflows from emerging markets as the Fed withdraws or reduces asset purchases, and that's having a big impact for now on a lot of emerging currencies. Now, for the rupee, it also has to cope with a number of negative domestic factors, hence it's been one of the biggest underperformers among Asian currencies in recent weeks.
So what levels, Mithul, do you see the rupee trade in over the next few weeks, and is the recent weakness, according to you, overdone?
Well, I think the rupee will continue to weaken in the short term. I would imagine we're going to end up in a range of around 57.5 to 58.5 in the next few weeks. I do think its weakness is looking overdone, however, but the reality is that India, unlike a lot of the Asian countries, still has to finance a current account deficit and has also the fiscal deficit to worry about, and because of this, it is constantly needing capital inflows. If we do see emerging markets see a withdrawal of capital, the Indian rupee is a currency that gets hit more than most.
But also, where do you see the USD yen trade move? Because ultimately, it is the dollar and the yen trade which will decide how things will move or how other currencies will move in the near term.
Well, I think again, dollar yen is another currency that's pulled back. We've seen a fairly sharp move back again in dollar yen to around this 99 or lower level. I don't think that dollar yen will have too much further to pull back. I think ultimately dollar yen will move higher. As you noted, there is certainly a difference in policy expectations for the Fed and the Bank of Japan. Bank of Japan will become more aggressive, if anything, on monetary policy, while the Fed is looking to taper its asset purchases towards the end of this year. And I think that will result in a widening in the yield differential in favor of the US dollar. So we see dollar yen heading to about 110 by the end of this year.
And do you see the Japanese yen easing as far as the global liquidity situation is concerned? Do you think it will make up for the possible drawdown of liquidity from the US Fed?
Well, the yen will remain under pressure because of this significant easing that we're seeing in Japan. The real question is whether a lot of this easing makes its way into global markets. As yet, the monetary easing in Japan is not finding its way overseas. Japanese investors continue to sell foreign assets, and the Japanese life insurance companies, as well as the government pension investment fund, will, in our view, be big buyers of foreign assets in the coming months, and that will see a flow of capital into Asia as well as other global markets. But for now, that hasn't been taking place. So, for now, it's not acting as a counterbalance to any potential Fed tapering.
Mithul, finally, in your view, which currencies are global investors flocking to in the light of search of yield? And we also saw low growth scenarios in most large markets.
Well, in the current environment of elevated risk aversion, higher US yields, the reality is that the investors are flocking towards safe haven currencies, and that's why we're seeing a bounce in the yen and also the Swiss franc, and pressure on a lot of high-risk, high-beta currencies. Further out, I do believe that we will see yielding currencies regaining attraction. I think the commodity currencies look particularly oversold. The Aussie dollar, Canadian dollar in particular, I am favourable of in the next few months, and I do see some recovery in these currencies, but also a lot of emerging currencies that will offer relatively better yield and better prospects for capital appreciation in the coming months. So, I would imagine that the scenario is to be long dollars against major currencies, but short dollars against many emerging currencies by the next few months.
It was good chatting with you. Appreciate you taking the time out and joining us. Well, at a one-year low, and it's a fresh low that we are seeing now on the currency, just about testing the 57 to the US dollar mark. That's where the currency is right now, 56.97 on last count. It's lower by a good 0.5% this morning itself. So fair amount of weakness coming in for the currency, and that doesn't quite spell good news for the equities as well.